Welcome to Spreadsheet Geek. In a previous video, we talked about skewness. In this video, we're going to talk about the cousin of skewness, or kurtosis. By the end of the video, you'll have a basic understanding of kurtosis and why it matters to investors. This video was made using Microsoft Excel 2019. While skewness measures the relative asymmetry of a distribution, kurtosis is a measure of the shape relative to a normal distribution. A perfectly normal distribution has a kurtosis of 3 and looks like this. Most observations lie within plus or minus 3 standard deviations of the mean. A distribution with a kurtosis of less than 3 is said to be platykurtic. There are less observations in the tails or extremes at either end. This figure shows a normal distribution in blue and a distribution with a kurtosis less than 3 in red. The red or platykurtic distribution has more observations toward the center and less toward the tails. A distribution with a kurtosis greater than 3 has more extreme observations and is said to be leptokurtic. In this figure, again, the normal distribution is shown in blue, and the leptokurtic distribution with a kurtosis greater than 3 is shown in red. A greater number of observations lie at the extremes. So how does all of this relate to the so-called kurtosis risk of an investment? Well, would you rather have your investment outcomes look like this or this? If you choose the short-tailed platykurtic distribution, you'll have more stable and predictable returns. If you choose the leptokurtic distribution, you'll have a greater standard deviation of returns. Kurtosis works hand in hand with standard deviation. They offset each other. A high kurtosis can be offset by a low standard deviation and vice versa. As I often do, I'm going to go to Yahoo Finance and download some historical data and compare 4 different investments in terms of their kurtosis and standard deviation. We're going to start with the S&P 500 ETF Trust, symbol SPY. I've selected historical data for the last 10 years, and I am going to set the frequency to monthly. There's a limitation in Excel's kurtosis function. It can only accept 255 data points. And if I set this to daily for 10 years, that'll be well in excess of 255. Let's download this. This is what the data looks like when you download it. You've got dates, and again, this is monthly data, so it's the first of every month since April 1999. And you get the open, high, low, close. We're going to use the adjusted close column, and I'm going to calculate the monthly return based on the adjusted closing price of this exchange-traded fund. So in the first month that we have here, this return was negative 2.3%. We'll autofill that all the way down. The closes in the adjusted close column are adjusted for dividends. So this 2.3% down in the first month factors in any dividends that were distributed during that time frame. A neat little tip I'd like to show is if you go to File, Options, and go to your add-ins right here, you want to go to Manage Excel Add-ins at the bottom. You want to turn on the Analysis Tool Pack, and that may take a second or two. And then when you go to your Data tab, you'll have this Data Analysis option right here. What I'd like to do is use Excel's pre-packaged summary data to find kurtosis. So let's click on Data Analysis. And it brings up this little dialog box. We want to choose Descriptive Statistics. And the input range I've already highlighted, but we'll just do that again since it didn't seem to take. And I'd like to output this information right on this worksheet, right in this cell right here. And we're looking for summary statistics. There's some other options you can check if you want to, but let's go ahead and hit that. And you get this nice little prepackaged table of data. And I'm going to make this a little easier to look at by taking these all to 3 decimal places. One of them is skewness. Kurtosis is up here. You have a maximum and a minimum and a standard deviation as well. So for this S&P 500 ETF, we are seeing a standard deviation of 4.4% and a kurtosis of 1. There's 2 things you need to remember about Excel's kurtosis function, which is KURT. And let's just run that right down here to show that it gives the same result that the analysis tool pack did. If I set it to the same number of digits, it's the same. But what you need to understand about this function, this KURT function, one thing I already mentioned, and it can only accept 255 maximum values. And the other thing is that this is actually not kurtosis. This is excess kurtosis. I really wish the people at Excel would fix this and label it correctly or change it to real kurtosis. Excess kurtosis is kurtosis over 3.0. So this kurtosis is actually 4.004. With Excel's skew function, a normal distribution had a skewness of 0. A normal distribution has a kurtosis of 3. Now, why that is, I don't know. I looked for it on the internet. Maybe somebody can tell me in the comments sections why kurtosis is neutral at 3 and skewness is neutral at 0. But that's a topic for another day. I'd like to take these monthly returns and put them into a histogram. So we have something more to look at here. Let's insert a histogram. And we'll call this SPY monthly. I prefer to set all of these bins to the same number of bins. So if you go to horizontal axis, let's go with 12 on all of these. So there's our distribution of S&P 500 ETF monthly returns over the last 10 years. This is a broad market index of 500 US-based large cap companies. And you can see the extreme low monthly return is in the 16% to 13.5% down range, while the best month was about 11 to 13.5, and everything in between. So this is a kurtosis of 1.0 with a standard deviation of 4.4. I took the liberty of doing this same exercise for QQQ, which is a NASDAQ 100 ETF, just like the SPY one, except it's almost completely technology companies, and there's only 100 of them versus nearly 500 in SPY. And then we'll take a look at Intel, which is a single company, kind of a bellwether blue chip technology stock. And then we'll look at Western Digital, which is really a volatile single company that's in an industry making hard drives that is characterized by a lot of volatility, a lot of extreme movements in price. So let's do the comparison. As we already said, the S&P 500 ETF has an excess kurtosis of 1, making the kurtosis just a little over 4, and this is kind of what you would expect from an S&P 500 very diversified exchange traded fund. This is just mildly leptokurtic or a little bit heavy in the tails to the left and the right. The NASDAQ 100 ETF, now we get up into a kurtosis of 1.7, actually excess kurtosis. So the kurtosis is 4.7 with a standard deviation that is bigger as well. So there have been more extreme outcomes observed with the NASDAQ 100 ETF versus the 500 company S&P 500 ETF. Let's look at Intel. Intel is a single company, so you're going to have single company kurtosis risk. You don't have the benefits of diversification anymore. The kurtosis on this one is going to be 5.3 with a standard deviation of near 10%. Let's finally look at Western Digital. Western Digital makes hard disk drives, and this industry has been known for its volatility. It's kind of a boom or bust cycle they go through all the time. Kurtosis, nearly 10. In fact, 13. That's excess kurtosis. So this would be 12.7 here, and a standard deviation of 18.1%. This is extremely volatile, extremely leptokurtic. I came across one website that described normal excess kurtosis as between -7 and 7. So we're outside that range here with Western Digital. I hope this little exercise has illustrated once again the benefits of diversification. If you haven't seen my video on skewness, you might want to watch that one where I looked at the skewness of the S&P 500's individual component returns. I don't think this little investigation we did just now has any big surprises in it. Just remember, when you use the kurtosis function in Excel, it returns excess kurtosis and it's limited to 255 data points. Also remember, you can't really evaluate kurtosis without also evaluating standard deviation. The two go hand in hand. I hope you've enjoyed this video and would like to see more like it. Please hit my subscribe button if you feel inclined. I'd like to hear your comments in the comments section, and thank you for visiting Spreadsheet Geek.